Bismillahirrahmanirrahim. Assalamualaikum and salam sejahtera to everyone. In this video, I'm going to discuss question 4 of December 2018 for ACC406. Okay, so for you ITM student, please download from EQPS. Okay, the same question so that you can follow the discussion. Alright, so here we have here question 4. So question 4 is for topic 7, accounting for partnership. Alright, and the question asks you to prepare profit or loss appropriation account for year ended 31st December 2018, prepare partner's current account, and the last one to list any two clauses stated in section 26 of Partnership Act 1961. However, in this discussion, I'm going to discuss only A and B. Okay. Alright, so to prepare the appropriation statement, the first thing is we are going to write down the name of the partnership business, okay, or the name of the partner, Hafiz and Hazim. And then the next thing is to write down the name of the statement, profit or loss appropriation statement account. Alright, appropriation. Okay, for year ended 30th June 2018. Okay, and then usually I will have two columns, okay, for the computation. Okay, so for the appropriation statement, we're going to start with the amount of net profit that we get from statement of profit or loss. Okay, so in this case, the net profit given in the statement of profit or loss for year ended 30th June 2018 is 128,875. Okay. Before we proceed with the items in the appropriation statement, okay, or before we allocate this net profit to the partners, okay, we need to consider, okay, what are the things which the partners, okay, are entitled to receive from the business, and what are the charge that the partner need to give to the business. All right, so it depends on the partnership agreement. If there is no partnership agreement, then we are going to use section 26. We're going to refer to section 26 of Partnership Act 1961. Okay, all right, and then if we need to adjust this amount of net profit, the adjustment also will be shown here. Okay, all right, so let's read together. Hafiz and Hazim are partners sharing profits and losses in the ratio of 1 and 3 respectively. It was agreed between them that each partner is to receive an interest on capital of 5% per annum, okay, interest on loan of 8% per annum, and 5% to be charged on drawings. Hafiz is entitled for a monthly salary of 1,000, while Hazim is entitled to receive a monthly salary of 2,000. The accounting year end of the business is on 30th June every year, and the following is the statement of profit or loss as at 30th June 2018. Okay, so this is the statement of profit or loss for year ended 30th June 2018. Right, and then we have here the additional information. Included in the salaries expenses are salaries paid to Hafiz and Hazim of 2,000 and 1,000 respectively. Okay, so included in the salaries expenses are the salary expenses of the business, okay, of the business expenses. Okay, this amount, however, okay, should not include the salaries paid to the partners, okay, because the salary paid to the partners are to be shown after the net profit. Okay, it is not computed in arriving at the net profit of the business. So we need to take out this one. We need to adjust. Okay, all right, and then okay, and then number 2, 500 of utilities has not been paid for current year. Okay, when the amount is not being paid for the current year, usually it is not included in the utilities account. Okay, before adjustment, usually it is not yet included. All right, so we need to adjust for this amount, okay, and to include this amount in arriving at the net profit. Okay, so we're going to show that under adjustment as well. All right, and then below are the opening balances of other account: capital account, current account, loan from Hafiz, drawing made during the year. Okay, so we have here loan from Hafiz. All right, please bear in mind that loan from Hafiz, okay, loan from Hafiz, okay, made Hafiz entitled to receive 8% interest on loan. And this 8% interest on loan is to be regarded as business operating expenses and to be included in arriving at the business net profit, meaning that this amount interest on Hafiz loan should appear here as part of the expenses. But as we can see from the list of expenses here, there is no interest on loan from Hafiz, okay, meaning it is not yet included when they prepare the statement of profit or loss. So we need to adjust the amount as well. Okay, and then drawings. Okay, so this is to reduce the amount of equity, and then to also to calculate the interest on drawing. Okay, so let's start with the adjustment first. Adjustment to the net profit. Okay, whatever items which are not to be included in arriving at the net profit, we're going to remove, and the item that should be included in the net arriving or in computing the net profit, then we're going to include. All right. Okay, so number one is the salary. So we are going to take out the salary of Hafiz as well as the salary of Hazim. Okay, take out here meaning that previously you have deduct this amount. Okay, you have deducted this amount in arriving at the net profit. So now we are going to add this amount, okay, to the net profit. All right, 2,000 and 1,000. Okay, and then we have here utilities. Okay, utilities or accrued utilities. Okay, we should it means that the amount of net profit should be reduced by this 500 ringgit, but it is not included when they calculate the net profit for the first time. Okay, so we are going to minus 500. Okay, and then interest on loan from Hafiz. Okay, so any interest on loan is to be regarded as business operating expenses. So this will affect the amount of net profit. Okay, so we are going to deduct from the net profit here. Okay, so how much? 8% times 2,000. Okay, all right, so the computation of interest on loan is on timely basis, meaning that starting from the date the loan was given to the business. But in this case, okay, it is the amount is maybe from the previous year, okay, because we this is an opening balance. All right, so the computation will be from 1st July to 1st January to 31st December 2018, okay, for one whole year. Right, so this one also will reduce the net profit. Okay, I think that's all for the adjustment to the net profit. So the total adjustment is 2340. Okay, and then we're going to calculate the adjusted net profit. So this adjusted net profit, then we're going to allocate to the partners. But before that, we need to take into consideration, okay, the partners' entitlement to the interest on capital, salary, and whether they are being charged of interest on drawing. Okay, all right, so sum. Okay, right, so the first thing is to calculate to add interest on drawing. Okay, Hafiz, how much is the interest rate of interest on drawing? 5%. So Hafiz, 5% times 2,000 ringgit. Okay, for how many months? Okay, from, okay, it is taken on 31st March. So We are not going to include March, but to start from April. April, May, June, July, August, September, October, November, December. So 9 months. 9 over 12. Alright, starting from the date they withdrew the money or they withdrew the goods. Okay, Hazim, 5% on 1,000 for, okay, June. So July, end of June. So we start from July, August, September, October, November, and December. So 6 months. Okay, so the total is right. Next, less interest on capital. Okay, to Hafiz and Hazim. How much? Okay, the interest on capital rate is 5% per annum. 5%. So 5% multiply with 35,000 ringgit. And for Hazim, 40,000 ringgit. Okay, next is less salary. To Hafiz and Hazim. Okay, so salaries here are the amount of salaries per annum. Okay, or from the first day they are entitled to receive their salary. Okay, so Hafiz entitled to receive the salary of 1,000 per month. Okay, and then Hazim 2,000 per month. Okay, so this is 12,000 and this is 24,000. All right. Okay. All right. Only then we can calculate the appropriation, the net profit before. Okay. All right. So some. Okay. So they are entitled to receive. Okay, the amount of net profit of the total of 91,565. Next, we are going to show share of profit for each partner, and this amount then to be transferred to partners' current account if they are using the fixed capital account. So let's check. Prepare partners current meaning that they are using fixed capital account, so this is to be transferred to partners current account. If they are using the fluctuating capital account, this to be transferred to capital account. Okay, Hafiz and Hazim, okay, based on their profit sharing ratio. So their profit sharing ratio, Hafiz 1, Hazim 3. Sorry, my mistake. I need to correct the first one. Okay, that's it. Okay, all right. So this is the appropriation statement. So the appropriation statement is a continuation from profit or loss. Okay, all right. So we're going to start the appropriation statement from the amount of net profit. All right, and then because in this question we need to adjust, okay, so we adjust first the amount of net profit, okay, for salary Hafiz, salary of Hazim, okay, the amount of utilities not yet recorded, and then also the interest on loan from Hafiz, which are not yet recorded as well. Okay, because how do I know? Okay, because from a statement of profit or loss provided, there is no interest on Hafiz loan or interest on loan from Hafiz, okay, stated in the list of expenses. Okay, so meaning we need to adjust for that item as well. Okay, and then we get the amount of adjusted net profit. All right, so this amount of adjusted net profit is to be allocated to the partners, but first we need to check the partnership agreement. Okay, what are the entitlement of these partners to the business profit? Okay, all right. Okay, so let's say for example we have here interest on drawing at 5% per annum, interest on capital at 5% per annum, salaries, okay, for Hafiz and Hazim. Okay, so the computation of this interest on drawing, interest on capital, salaries also are based on accrual basis, meaning that we are going to include the amount incurred or earned for the year. Okay, all right, regardless the amount is being paid or not, or being received or not by the partners or by the business. All right, okay, so based on that partnership agreement, so we calculate, okay, their entitlement to this amount first, or the amount that they are being charged by the business. For example here, interest on drawing, and then we have interest on capital and salaries. Okay, now we have here net profit before appropriation. Okay, so from this net profit before appropriation, then we are going to allocate to each of the partner based on their profit sharing ratio. So based on this profit sharing ratio, the total is 4. So Hafiz entitled to 1/4, Hazim is 3/4. Okay, all right, so that's it. Next is to prepare partners current account. Okay, so let's prepare partners current account. Okay, so make sure you have a column for each of the partner, Hafiz and Hazim. All right, okay. As usual, when we prepare the account, okay, we're going to check for any opening balance. Yes, there is an opening balance, so we're going to start with the opening balance. Okay, balance BD. For Hafiz, it is 1,200, and then for Hazim, it is 1,500. All right. Okay, next. Okay, next we're going to transfer, okay, amounts from the appropriation statement to the partner's current account. Okay, whatever that we have deducted, okay, or from appropriation statement, for example, interest on loan from Hafiz, okay, and then we deduct interest on capital and also the salary. This amount then will be added to the partner's current account. Okay, however, okay, the amount that we are going to add here, okay, in the partner's current account, okay, are the amounts that they did not receive yet for that year. Okay, all right, for example here, okay, for example, let's look at here. Included in the salaries expenses are salaries paid, meaning that Hafiz and Hazim already received 2,000 and 1,000 each. Okay, all right, but they are entitled to receive Hafiz 12,000, Hazim 24,000. Okay, at the time when they receive the amount of salary, okay, the journal entry at that time is this. Okay, when they receive, at that time it is recorded as debit salary. Hafiz and Hazim. Hafiz 2000 and Hazim 1000. Credit cash 3000. All right, that is what happened, okay, at that time. All right, and then unpaid amount, but they are entitled to receive Hafiz 12,000. So far Hafiz only received 2,000. Hazim entitled to receive 24,000, but so far Hazim only received 1,000. Okay, meaning that there is an accrued salary to Hafiz and Hazim. However, the treatment of accrued salary to the partners is not the same as accrued salary to the employees, where we record the item as accrued salaries. To the partners, we are going to adjust against, right? So we are going to record the balance salary. Hafiz, okay, amount not yet received is 10,000. Okay, Hazim is 23,000. Okay, instead of we create an accrued salary account, we are going to credit to current account, okay, of Hafiz and Hazim. Okay, the total of 33,000. Okay, we're going to include this amount in their respective account. Okay, all right, so that's why here, okay, here when I transfer, because I said that just now we're going to transfer everything. Yes, it is correct, but not everything will be transferred if it is already being paid to the partners, okay, or received by the partners. Okay, all right, okay, so number one, okay, interest on loan. Okay, interest on loan of 160, Hafiz. Okay, next, interest on capital, and then we have salary. Okay, so salary we have identified here. Okay, 10,000 to Hafiz and Hazim 23,000. Okay, how much is the interest on capital? Interest on capital is 1,750 and 2,000. Okay, next. Okay, and then we are going to include also the profits. Okay. All right. Okay, so this amount entitled to be received by Hafiz and Hazim. Current account is an equity account. So this is why, okay, anything that will increase the equity of Hafiz and Hazim, that will increase the equity of Hafiz, the current account of Hafiz and Hazim, then it will be credited. Okay, it will be credited. Okay, next. Okay, whatever that we add here is to be deducted from their account. Okay, so interest on drawing. Okay, and we are going to include also drawings, because drawing reduce the equity amount of the partners, okay, or of the owners. All right, so Hafiz 2,000 and 1,000. Okay, that's why we debit this amount, because when you debit current account, you are reducing the equity account. Okay, all right, so I think that's all. Let's check again. So this one, okay, this one, yes, 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 Yes. Okay, settle. Right. Next, I'm going to calculate the balance CD. Okay. Okay, it seems like debit the total of the credit side is more than the debit side, so we have a balance CD. We have a credit balance CD on the debit side. Okay, so let's finish this one. Alright, so finish. Okay, the discussion of question for December 2018, accounting for partnership. Alright, where we need to prepare the appropriation statement and also the current statement. Alright, so let's look at again. Okay, so for the appropriation statement, we're going to start with the net profit. But before we calculate, the amount of profit to be allocated to the partners, we need to check. Do we need to adjust the amount of net profit? All right, yes. So in this case, yes, there are a few items that we need to adjust. The first one regarding the salary to the partners, which are included in the business operating expenses. Okay, and then we need to adjust for the accrued utilities. Okay, and then we need to adjust also for the interest on loan from Hafiz because it is not yet recorded in arriving or in computation of the net profit in the statement of profit or loss. Okay, right, that's it. All right, and then we have here adjusted net profit. Okay, once we have the adjusted net profit, then we are going to take into account, okay, whatever all the entitlements, okay, by the partners based on the partnership agreement, or if there is any charge to the partner by the business, again based on the partnership agreement. If in the absence of partnership agreement, then you have to refer to section 26 of Partnership Act 1961. Okay, so the first item after the adjusted net profit or after the net profit, if you don't need any adjustment, okay, you need to add the interest on drawing, okay, less interest on capital, and then less salary. Okay, so the amount of interest on drawing, interest on capital, and salary are the amount of incurred or earned for that year. Okay, all right, and then after that, we are going to calculate net profit before appropriation. So these are the amount of profit to be allocated to the partner's current account based on their profit sharing ratio. So Hafiz entitled to 1/4 and Hazim to 3/4, okay, of net profit before appropriation. Okay, and then all of this then will be transferred to the partner's current account. Okay, so when you prepare partner's current account, you are going to start with, okay, you are going to start with balance BD or the opening balance. If it is a negative, meaning that the balance is a debit balance. Okay, but partner's current account is an equity account. Okay, so that's why if you have a negative partner's current account, meaning that, okay, they have a debit balance instead of credit balance. Okay, all right. So we are going to start with the opening balance, and then we're going to transfer from the appropriation statement to the current account. Okay. However, if the amount is already paid to the partners, then the amount will be is not to be included in the partner's current account. For example, the salary here. Okay, so instead of we record it as accrued salary to the partners, we are going to update in the partner's current account. Okay, and then we have a profit here. Okay, what if you get a loss, okay, on get a net loss instead of net profit? Okay, so appropriation loss will be here on the debit side of partner's current account. Okay, and then you're going to you are going to deduct, or you are going to reduce the partner's current account by interest on drawing and the drawing. Okay, and then you're going to calculate the balance CD as usual. Okay, and then that's it, balance of everything, and then you have finished preparing your partner's current account. You have finished updating the partner's current account. That's all. Okay, thank you.